Welcome back to the channel. Today, we'll be breaking down stamp duty and how it affects property purchases. Whether you're a first-time buyer, buying your next home, or investing in additional property. If you've ever purchased a property or are planning to in the future, you have no doubt encountered stamp duty or SDLT. But what exactly is it? Why does it exist? And how is it changing in 2025? Stay with me as we go through this and more in this video. Stamp duty land tax, or more commonly known as just stamp duty, is a tax which is paid by the purchaser when buying a property, whether it's bricks and mortar or just land. Now, the amount of stamp duty you pay depends on two factors. One, the value of the property. The amount of tax owed changes depending on the price of the property and lies between 0 and 12%, depending on the sale price. And two, whether you're a first-time buyer or already own a property. If you are buying your first property, you can claim a relief on this tax, which means you wouldn't pay the standard rate of stamp duty for this transaction. So why does it exist? Now, in the UK, stamp duty has been around since the late 1600s, when it was introduced to generate war funds and only intended to last just 4 years. But it was so efficient that it still exists today, centuries later. The name stamp duty originally referred to documents which required a physical ink stamp as confirmation that the tax had been paid. But as the tax evolved over the years, it began to be paid for different documents and items for different financial situations, until the most modern reform, where it changed to stamp duty land tax as we know it today. How is stamp duty used by the government? Number one, revenue generation. Due to the amount of property transactions, stamp duty generates significant amount of funds to fund public services and infrastructure. Number two, market regulation. The tax can be used to regulate the property market activity, particularly in response to external financial circumstances and property supply and demand. And number three, encouraging fairness. As mentioned, less stamp duty is owed on cheaper properties, and relief for first-time buyers arguably makes home ownership more accessible for those getting onto the property ladder. The government adjusts stamp duty on a regular basis in response to external economic conditions. The most recent changes are no exception. Last October, Labour's autumn budget set stamp duty amongst an array of other tax and financial changes. So let's look at the upcoming changes coming in the new financial year. How will stamp duty change in 2025? For single residential properties, you pay the following rates of stamp duty until the 31st of March 2025. Up to 250,000, you pay 0 stamp duty. The next 675, you pay 5%. The next 575, you pay 10%. Any remaining value, you pay 12% stamp duty. The autumn budget changes to the tax will take effect in the new financial year. Here's how stamp duty is calculated from the 1st of April 2025. Up to 125,000, you pay 0% stamp duty. The next 125,000, you pay 2%. The next 675, you pay 5%. And the next 575, you pay 10%. Any remaining value, you pay 12% stamp duty. How is stamp duty calculated on a purchase? If, for instance, you were to buy a house after 1st of April 2025 for 330,000, the amount of tax owed is determined as follows. 0% tax on the first 125,000, 2% of the second 125,000 equals 2,500. 5% on the remaining 80,000 equals 4,000. Total stamp duty owed, 6,500. With that out of the way, let's look at other factors which impact the stamp duty you pay. First-time buyer relief. If you're a first-time buyer, you're entitled to claim a discount on the stamp duty you pay. Just like the rates we just discussed, the relief is also changing in the new financial year because of the autumn budget. For property purchases up to the 31st of March 2025, you pay no stamp duty up to the value of 425,000. and 5% on the portion from 425,001 to 625,000. If the price is more than $625,000, you cannot claim the relief and will pay the standard rate of stamp duty. For property purchases 1st of April 2025, you pay no stamp duty up to the value of $300,000. 5% on the portion of $301,000 to $500,000. If the price is over $500,000, you can no longer claim the relief and are still entitled to pay the standard rate. Additional home surcharge. When buying an additional property, i.e. property that you will not live in, like an investment or a buy-to-let, you will pay a higher rate of stamp duty, usually 5% on top of the current rates of stamp duty. So what does this mean for you? Even if you're a first-time buyer, the rates of stamp duty and its implications are something to keep an eye on, especially as the property prices and legislation are always changing. What should you be aware of if you're planning to purchase a property? Number 1, check your eligibility. If you're a first-time buyer, you could benefit from reduced or no stamp duty on a property purchase, so familiarise yourself with the relief figures. Number 2, factor in your budget. Consider your budget and the amount of stamp duty that you would expect to pay. Do this before proceeding with any sales so you aren't caught off guard. Number 3, consider timing. If you're thinking about buying, recent changes might mean now is the right time to take advantage of lower rates. And remember, consulting with a financial advisor or solicitor can help you navigate these complexities. Consider the fact that the current stamp duty brackets will change in the new financial year. So be sure to keep this in mind if you're progressing with a sale, as stamp duty is due on the completion of the sale. Although stamp duty may be a frustrating extra expense, it is important to understand how they are changing and how your circumstances may affect the amount of tax that you pay. That's all for today's video. If you got any sort of value from the video, please be sure to like the video and subscribe to see more from us in the future. Thank you for watching, and we'll see you on the next one.